Ladies and gentlemen, good day and welcome to the Valiant Organics Q1 FY23 earnings conference call. We have with us today Mr. Arvind Chheda, Managing Director, Mr. Mahek Chheda, Chief Financial Officer and Executive Director, and Mr. Mihir Shah, Senior Finance Manager. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ayush Chaturvedi from Emkay Global Financial Services. Thank you, and over to you, sir.
Thanks, Faizan. Good morning, everyone. I hope everyone is doing great. I would like to thank and welcome the management for this opportunity. And I shall now hand over the call to Mr. Arvind Chheda for the opening remarks. Over to you, sir.
Thank you. Good afternoon, everyone, and welcome to the earnings conference call for the first quarter of the financial year 2023 of Valiant Organics Limited. Thank you for joining us today and hope everyone is keeping safe and well. I hope you had a chance to review the earnings presentations and our financials that we have posted on our website and exchanges. On a consolidated basis for the first quarter of financial year 2022-23, the revenues from operations stood at around rupees 266 crores, which grew by about 9% on year-on-year basis, and EBITDA was about rupees 32 crores, which grew by about 37% year-on-year, with EBITDA margins reported at 11.99%. The net profits for the quarter was about 17 crores, which decreased by about 41% year-on-year, with PAT margins reported at 6.35%. You can see our Q1 financial 23 financials were significantly impacted primarily due to the unfortunate blast at our chlorination plant in Saregam on 3rd June, leading to complete plant shutdown for an extensive period. The blast was an isolated incident that occurred in one of our chlorination reactors, which caused minor damage. Thankfully, there was no loss to human life. However, a minor injury was reported to one person who received the medical treatment and has been recovered. The incident was reported to concerned authorities immediately, and after extensive checks, the extent of the damage had been estimated to around rupees 5 crores, which will be fully covered under the insurance along with LOP. The plant was given permission to resume operations on 21st July 2022, although it would take few weeks to restore operations to resume normalcy. Unfortunately, last quarter, apart from this unfortunate event at Saregam, we had a double whammy impact across some of our other chemistries as the demand of our hydrogenation products, which goes into dyes and pigments, was subdued in the quarter, and we also had to undergo a mandatory maintenance shutdown at one of our ammonolysis plant. With regards to PAP, batch process is running as planned and have maintained an average run rate of around 350 metric tons per month for the Q1 FY23. The pharma intermediates project is still awaiting approvals. Water runs have been done, and the trial runs and the production in the phase maintenance will commence immediately once the approvals are in place. Price volatility stabilized to a certain extent in Q1 FY23 of our key raw materials, and the positive impact of this will be seen in the quarters ahead if the market dynamics continues to remain the same. Considering all these challenges, we still able to post a small revenue growth in the quarter on year-on-year basis. As operations and raw material prices volatility stabilize, we hope to see a positive impact in our financial performance in the coming quarters. With this, we can now open the floor for questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and one at this time. The first question is from the line of Parthiv Shah from Tracom Stockbrokers. Please go ahead.
Good afternoon, sir. Thank you for the opportunity for allowing me my question. The first question I want to understand is that this incident, unfortunate incident which took place, which surely dented our results, going into Q1, and if I'm not wrong, in your presentation I saw it took almost July end for you all to get back the production. So how much of an impact is also going to be in Q2 in terms of margins and in terms of revenue loss? And also, sir, I want to understand that based on your previous guidance, the PAP production in quarter targeting somewhere around 500 tons per month, which despite stabilization, despite past commentary, we have reported around 350 tons per month. So I just want to understand, is there any link between this particular blast? Because as I understand, your PAP hydrogenation plant is separate. So could you throw some light on that as well, please?
The chlorination will suffer 1 month production.
Sorry, sir, your voice is not coming clear.
For chlorination, we may suffer this July production basically. And this PAP at Jagadia and this chlorination is at Saregam. The locations are both different. There is no link with the PAP production actually. And regarding PAP, I think we may reach by around 450 in the current month.
Sir, I'm sorry, but what has been happening with Valiant is the communication and what execution happens on the ground has been lacking because, this is something that we are trying to achieve and, in the last previous phone calls, there was a lot of confidence from the management that now that stability has improved, that paint issue has gone. And despite that, we were talking about a run rate from quarter one of 500, which is an optimum run rate in the batch process. And simultaneously, you were to work on the loop reactor, which also, probably we are talking of quarter 4 of this year. Sir, why this delta? Because the loss of 150 tons per month in terms of your previous guidance versus what you executed is a big loss. So, I mean, where are we headed and where are we going wrong?
Hi, Parthiv. Mihir here.
Hi.
I think there's some understanding issue because last earnings call I said we'll reach 500 after in the second half. So that is the I think you just probably may recheck. We never agreed to 500 tons per month in quarter 1. So that is one thing that I wanted to clarify. 350 is what we had said anyway. We exactly matched what we had said. We'll be ramping up in Q2 and by second half of this year is when we'll reach 500 or 550. So that is what I had said earlier.
Fair enough. So by quarter 3 we can expect a bit of 500?
Yeah, we are hoping to be at around 500 by quarter 3.
And will it be safe to assume that the continuous process, the benefits will start accruing from only quarter 1 FY24?
So we are still doing the test run. So if all go well, then that is what we assume it will be. But I cannot really give any assurance on the continuous side. But on the batch side, we are hoping to be in the 500-550 range for the year.
Okay. And I'd really appreciate if you could help me quantify the loss for quarter 2 based on this incident in terms of revenue and margins if possible.
See, that working is going on with the insurance company.
Okay.
It's difficult to tell you right now the exact figure, It's still in the process actually.
No, sir, I mean in terms of the production, because I think even in July month, we were not able to ramp that plant up post the incident. So I want to understand how much of an impact in our revenue and margins will have in quarter 2 results.
I think on about a revenue of 30-40 crores may get impacted for Q4.
Sorry to interrupt you, sir. The audio is not coming from your line. Please check.
Sorry.
It's
Hello.
audible now, sir. Yes.
Hello.
Hello. Yeah, I can hear that. Yeah.
So we'll have about 20 crores of loss because of on the Q2 side.
Okay. Q2 around 20 crores loss and
On the revenue, sorry, not the profit, revenue.
revenue fine. Fair enough. Okay. Thank you so much. That answers my question. All the best.
Thank you. The next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah, thank you. Good morning and good afternoon, and thanks for taking my question. This question I have asked even in the previous quarter. I just wanted to understand what is the margin on the PAP. My understanding is that should be upwards of 60% on the gross profit basis, which clearly even after chlorination, which is generally a low margin business, has fallen. We have not seen a material uptick in the margin. So what are we missing here? Because we know PNCB prices are around 200-225 rupees. PAP prices, at least till the date of May, which I tracked, was upwards of 600 rupees. So what are we missing here in terms of gross profit? Will you be able to reconcile and help us?
So just to correct you, in fact, chlorination is our higher margin revenue.
No, it could be at EBITDA. Here I'm looking at more gross profit.
Gross profit also, chlorination is a better...
So you're telling it is more than 60% kind of a gross profit margin for us?
60?
Yeah, 60.
No. It will be...
Then, PAP and TAP is very clear, right? PNCB is 225, TAP was around 600.
I am talking about chlorination. Your statement mentioned that chlorination was a low margin product and hence that impact should not have been there, but I'm saying that chlorination is actually a high margin product.
No, on what level you are telling high margin, whether on a gross profit level or on EBITDA margin?
Gross profit.
Oh, thank you. So gross profit, my working says that it should be 60% plus for PAP. I am not sure on chlorination.
I am talking about chlorination.
Okay.
I am talking about chlorination because your statement when you said that chlorination was a low margin product. So I'm talking on the chlorination side. I'll come to PAP.
Okay.
Yeah. So chlorination is a high margin product, and because of that, our margins have got impacted because of the blast. Coming to the PAP side, it is not a high margin product because it is not selling at 600 rupees. We are at a lower, it will be somewhere around 550 rupees per kg. It's somewhere around that area. And hence the margin on PAP will not be 60%. It will be much lower than that.
No, even if I take 550 and PNCB price at 225, that means we are making a very healthy margin upwards of 50%. Mm-hmm.
Yes, PNCB, yes, there are other raw materials. There will be hydrogen, there will be other stuff.
Hydrogen is our internal material.
Expensive thing. We'll have that cost as well. Then also this is in a ramping up stage, correct? So there will be some fixed cost which will come to it where the margins will improve as the scales improve. But currently it is not at 60%. I can say that for sure. And secondly, we really don't get into the product level, discussion because it's also proprietary. So we don't want to get into that. But just since we are on it, I'm telling you that it is not a very high margin product on PAP. It was high when the pandemic was on and the prices were high. But once things are stabilizing, it is not going to continue to remain a high margin product. It will be a normal 17 to 18% EBITDA kind of a product.
So when can we see this 17-18% EBITDA margin to come as when we hit 500 metric ton? Is that will be a fair assumption in the second half of this year?
We are hoping we should be able to reach there in the second half of the year.
Okay.
By Q3.
By Q3, Q4, right?
Q3, Q4.
Second, on overall raw material side, we are seeing a deflation in the crude and we are heavily dependent on crude derivatives. I think that will benefit us. So how should we think the recovery in the margins from here? Because from the peak, our margins have fallen quite sharply, and we have been confident that we will be reaching 20%. Can you help us understand the journey from here to, say, 20% plus kind of an EBITDA margin?
Sure. So correct. We do pass on the thing. We do pass on the cost, and it happens on a contractual level. So it happens quarterly. So like Arvind Bhai also said in his speech that we will see improved margins going forward if the prices continue to remain stabilized and no any volatility comes in. Unfortunately, because of the blast, our high margin, which is also like the prenation, impacted. So our margins went down because there are costs that will continue to remain, which are non-variable in nature. But once now that Sarigam unit is also up, and that will come up. Second thing, dyes and pigment market demand is low. So on the hydrogenation unit 1 in Jagadia that we work out of, there we are underutilized to a certain extent because of the demand issue. So if that also improves, our margins will improve because we are currently running at a under optimized utilization for unit 1.
Two more follow-ups, sorry for sticking to this. One on the falling prices, does that should release a lot of working capital for us? Because last year there was a build-up of working capital because of price hike. That working capital should get eventually released, right?
Correct.
That's a fair assumption?
Yeah, that's a fair assumption.
Okay. Last one on the dyes and pigments.
Just a little bit, probably somewhere in between the quarter, we'll have that ease of things because our revenues from Sarigam has got impacted. So to that extent, there will be some hit, but otherwise, yes, working capital will improve.
Last one, this dyes and pigment. You have been mentioning of a demand weakness. Can you elaborate that? What is causing the weakness in dyes and pigment segment? And one of the large pigment player did announce a result, and again we could see that weakness there as well. So can you help us explain what are you hearing from the customer? What is leading to this weakness?
I think it's just market demand. I'm not much into the market dynamics, how it's working, but the overall our dyes and pigment go into the textile dyes. So that as long as the textile industry is weak, our dyes and pigment product demand will also continue to be weak. So that's all I have on the market demand side, but let's hope it improves as the textile industry improves.
No, see, my worry is that textile industry as such has not done so bad. Is it China dumping more product into India? Have we seen any of that kind of a phenomena happening?
No, that's not the issue.
That's not the issue. Okay, fair enough, Mihir. Thanks for answering all my questions and best of luck.
Thank you. The next question is from the line of Aditya Khetan from Smiths Limited. Please go ahead.
Yeah, thank you for the opportunity, sir. So my first question is, what would be the current prices of PAT? And secondly, by which quarter can we convert it from batch process to continuous process?
Sorry to interrupt you. The audio is not clear from your line. Please use the handset mode.
Hello?
Yeah, go ahead.
Yeah. Sir, my first question was on to the current prices of the para-aminophenol, and secondly, sir, by which quarter can we convert it from the batch process to continuous process?
So the prices on para-aminophenol are on a downward trend. You can probably assume somewhere around 510 rupees, somewhere in that range as of now. So that would be a fair estimation. And on the continuous, like I said, we are trying. We are hoping that we'll probably try getting it by towards the end of the year. But on a conservative side, I think probably continuous can be considered from next year onwards.
Okay. And secondly, onto the Sarigam incident, so how much revenue was contributing by the Sarigam plant onto the revenue and onto the EBITDA side?
On the revenue side, Sarigam was contributing. So if I see Q4 of Sarigam, it was somewhere around 78 crores, which for this quarter it come down to 41 crores. So that's how what the delta is on the revenue side. And on the gross margin or the EBITDA level, it's one of our highest margin products. So that has some erosion coming out. But I don't want to get into the specific numbers of a product-wise units. It's proprietary, but just giving you an understanding that the revenue has probably fallen to around 50% of what it was because of the blast.
Okay, so the Sarigam plant, so the blast was majorly into the chlorination business only, you said, like that time you were right. Okay, and this is contributing roughly around 40% to the revenue.
Yeah. It's not 40% of the revenue. I'm talking about the drop in chlorination, what it was in Q4 to this one, it's about 50%.
Got it. So just one more question. So just after this blast, what we had seen that, so just after the blast only, so the promoter has sold heavily, like, is there any connection between these two things? Like, so there is a blast and then only the promoter comes and sell, like, and they were selling like anything, like, so the promoter holding also has been reduced a lot from the last quarter. Can you highlight, like, so what is actually happening and why this has happened post that blast only?
Hello. See, Mr. Hemchand Gala was a managing director earlier. He's no more with the company. And if he's selling in his personal capacity, we have no control on it, It may be his personal reason, we are not aware, We are not in that business, actually.
But sir, actually he is classified into one of the promoter categories. So can we do one thing? So can we declassify?
He was a promoter earlier. He's still in that category, but he's no more in the company now. On day-to-day business, and he's not involved also now.
Okay. But sir, that is not giving out a true picture, like, because he is classified as a promoter still, and because he's selling so heavily, so that indicates that is there some fundamental problem into the business which investors do not know, like that?
He is still classified under promoter, I tell you. He is still under a promoter's list because it is not going to change so in the immediate term, But he is no more with the company,
Okay. And why, sir, so he has sold, so just after that Sarigam incident only, anything you can highlight on it?
No, we have no idea about it,
Okay, sir.
There is no problem in the company, but it may be some personal requirement. We cannot know about it now.
Okay, sir.
Everybody has their personal problems,
Yes, sir, that I understand. But sir, can't we have done one thing, like, so they were selling, so some of the promoter groups can buy that, so that promoter shares, so that couldn't have been done, like?
See, we are not aware when he's selling,
Okay.
He's selling in his personal capacity in the market. We are not knowing about his ideas, basically.
Okay. Got it, sir. Thank you.
So we cannot control him, no?
Yes. Sure, sir. Thank you. That's all from my side.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Gaurav Shah from Harshad Gandhi Securities. Please go ahead.
Yeah, thanks for the opportunity. So my question is EBITDA margin. As you are saying, we are in a position to pass on the raw material increase on a quarterly lag basis. But our margin are continuously falling. So I just wanted to check what kind of price increase we have passed on in the last quarter. Thanks.
So in the last quarter, the prices were still increasing. So we definitely passed on wherever the contracts were getting renewed. Where the contracts were not getting renewed, it will only get passed on at that point. So even though the prices have stabilized in this quarter, the benefit of it will only happen once our quarterly contracts get completed and we do the renewal of that. So probably this quarter you will see some improvement in the margins. You have to take it with a pinch of salt because of the blast. There might be some erosion there, but otherwise, had that not been there, we would have seen a better quarter in Q2, given that the prices have stabilized. So that passing on happens slowly. So wherever there are spot contracts, which is not really a big percentage, there we pass on immediately, but others are quarterly and few of them are also 6 monthly. So that takes time.
Okay, so maybe by 24, do we assume that we can achieve about 20% EBITDA margin, assuming all other things are equal, like no geopolitical tension and all that?
Yes, that would be a fair assumption.
Okay, thanks a lot.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Shrishti from Monarch Networth Capital. Please go ahead.
Thank you for the opportunity, sir. So I had one question on that our chlorophenol plant was shut for 1/3 of the time. However, volumes have declined by like 50%. Are we facing any other issue there?
No, that is the issue. The only issue is the blast, and the volumes have declined because it's an entire month of production stop. So that is where, and it had a very impactful for the quarter.
Yes, sir. So our June month was impacted, right? But in May, so is that like seasonality heavy?
Your voice.
Okay.
Shrishti, your voice is not clear. Please.
Hello.
Yes.
Yeah. Hello. Is this better?
Yeah, this is better.
Sir, June month was impacted. However, our volumes have come down by like 50%. So I wanted to understand, is June quarter seasonally heavy, or are we facing some pressure from China?
No.
Nothing of that.
We are able to compete China. There is no problem.
Mm-hmm. So why was there like a higher decline in volume?
Okay, one was the blast, and second thing, there was the issue of this HCl disposal.
Mm-hmm.
So
Yeah.
these guidelines have changed under the Rule 9. So for that, we are taking some time. So now that is almost over now. So in the future, there will be no problem with HCl disposal also now under Rule 9. Because Gujarat government is very rigid on this hazardous waste now.
Sure, sir. That's what I wanted to understand. So my second question was that in our hydrogenation products, we are facing subdued demand for second consecutive quarter. Are we starting to worry about that? Are we trying to think of new avenues there?
Yeah. So we are, upping our game on the, the marketing side in terms of the key product, the OAPA, which is the Unit 1 products. So we are definitely trying to address this demand, that way. So, but given that it will improve, we just have to, wait and watch.
Sure, sir. That was very helpful. Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Somin Chatterjee from JRK Stockbroking. Please go ahead.
Yeah. Good afternoon, everyone. Thanks for taking up the question. Well, due to the blast, we lost around 35 odd crores in this last quarter, right? And now we have resumed the operations, but it will take some time, as you have said in the presentation, that it will take some time for normalcy to get back. So is it fair enough to assume that for the next 2-3 quarters also, this contribution from chlorination unit is not going to be that much, which was in quarter 4 of the last fiscal?
Yeah, almost we are resumed around 60% operations in chlorination right now. I think in the next 8 to 10 days, we will be able to operate at around 75% to 80%.
Okay.
So
Means 70 to 5% will be the capacity utilization. That will be the CO.
Yeah.
And what was it during the quarter four, last fiscal?
Last fiscal was around 85 to 90%.
Okay, that means this quarter we will be back to around, means we'll recover around 10-15 odd crores, right? In the revenue side.
Correct.
Okay, and by the quarter three, it will come to the normal level.
Yeah, quarter three will be normal.
Okay, and anything about the margin guidance you can give for the next 3-4 quarters?
No, I think you should.
Is it the worst? Means we have bottomed out in the margins part?
Yes, it has been the worst so far.
Okay. Means if everything remains stable, there will be a gradual recovery, right?
Correct. And correct, unless something unforeseen happens. But given that if nothing of any of such incidents or market volatility also doesn't really change much and it improves, then yes, it will be an upward trend going forward.
One more question. The question is from the pharma intermediates project, right? Now this is actually backward integration of for Valiant, right?
Correct.
The pharma intermediate. So there is some approvals are still wait to come, means you are waiting for some approvals to come.
Correct.
What kind of approvals? Means approvals from where?
From the authorities. We are basically waiting for CTO, consent to operate. We are waiting for that to come in.
Okay.
And there's one more. This is the approval that we are waiting, which will probably take a couple of weeks, about a month or so.
And this is completely for the backward integration?
Correct.
Okay, fine.
Thank you. The next question is from the line of Ankur from Quasar Capital. Please go ahead.
Yeah, hi sir, good afternoon. Thanks for taking the question. So actually on the promoter group front, obviously one can say that for a particular quarter there is no control, but I have been seeing it as a very long-term trend, maybe since the time of listing, that continuously promoter group, directors, related parties, and the group people who were maybe previously with the company and now maybe they are not, they have been constantly selling shares in the market. One can understand that at a particular point in time, if suppose someone wants to encash, they can. But even at distressed valuation, we have seen this go on, and it involves all the management people, even who are present over there. So, can you address this question? Because I think this is a real problem where the investor community is not able to get enough conviction in the company because the insiders are continuously selling. And every quarter we talk about improving performance, and we want the company to improve performance and all of that. But then again, our understanding is that the promoter family and all of those people, they are more privy to the operations, and still they sell in spite of an improving commentary. So how would you address this question? Because this is becoming a real problem now. It's a long-term trend. I can think about a quarter, but what about the long-term trend which I'm seeing? I have the screen in front of me. Since 2019, the promoters have been selling.
So, Ankur, I understand your concern, and we take your feedback also. We've noted this also in the earlier Concalls as well. But understand that, it takes time for a solution, a common solution to arrive at. So we are taking that into consideration. These are different people who are classified in the promoters. They are of different age, coming from a different kind of background where they can be old, just like any other financial investor. They might want to just move, diversify. So I understand your concern, and we are really taking that into consideration, and we are looking for a solution also. But I can assure you that there is no problem at the company level, and which is why they are selling. If you get into the details of who is selling, you will know that these are all different promoters of different age, selling their needs at different times. So rest assured, it's all okay, and your point taken.
Sure. Sure, and all the best. I really hope that the EBITDA and the business recovers well. I've been tracking it since a long time. I just hope you'll rebound that well. Thanks.
Thank you so much.
Thank you. The next question is a follow-up question from the line of Parthiv Shah from Tracom Stock Brokers. Please go ahead.
Thank you, sir, for again giving me the opportunity. Sir, in lines of the question asked by the previous gentleman, what I want to try and understand from the management mindset is that...
Sorry to interrupt you. The audio is not clear. Please...
Sure. Is it better now?
Yes, better.
So, sir, I just want to understand, like, if I see a yearly outlook, past 1 year outlook, due to a lot of reasons, and some reasons which are certainly not in the hands of the management, the Ukraine war and all that, our stock has corrected by almost 61%. And, I understand that there are a lot of managements involved, and you gave a very valid reason that, it's not in control of everyone. They might be old investors, etc. But what about the investors or the promoters who are currently having skin in their game for this company? Why aren't we not witnessing anybody wanting to latch up? Because if you see track record of a lot of other chemical companies, and chemical being a very highlighted sector had even corrected a lot. And a lot of other peers, you're seeing the promoters coming back, buying their stock, having good visibility for the long term. We are definitely having good visibility for the long term as communicated by the promoters at Valiant. Why are we not seeing that? That is a little perplexing element. I understand that, we cannot stop somebody from selling their stock. They might be old investors. But out of so many classified promoters, why is nobody willing to buy the stock even at current levels and increase the stake and give that confidence to the market that these promoters are also having skin in their game?
No, the part is, like I said, even the previous person was also, we are trying to give that assurance only that we are working on a solution. Having said that, I do not have anything further to really share on this matter. We will look into it. We will see how we can, rectify or have a better solution that, kind of eases investors. But again, there's no problem with the company and why they are selling. But this is the only thing I can say. There's nothing beyond for me to even share at this point.
Very enough, sir. Thank you.
Thank you. The next question is from the line of Vikas Rajpal from Reliance PMS. Please go ahead.
Hi, sir. Thanks for taking my question. So in your presentation, you have mentioned about a lot of ongoing projects and, the commission projects, and many of them are to either for backward integration or for forward integration. And I suppose that, these, projects would, better the margins going forward. So currently we are, in this quarter, we had a margin of about 11%. So as these projects come on board, could you give us some, color on how by FY24 or by FY25, what kind of a margin profile are we looking at the company level?
So on the presentation, we mentioned some past projects also and the new ones also. So in the new project is basically pharma intermediates and the OAP, the two products that are awaiting, and PAP is the one that we are ramping up. So once all of them kick in, yes, there will be an improvement in terms of sales volumes and as well as margins. But so OAP is one product which we are considering a little high margin. Pharma intermediates is a small plant, so even though high margin, it may not have a significant impact on moving the needle at this point. If we intend to grow further on this pilot plant, then yes, but otherwise it's a 20 metric ton capacity unit, so that's not going to move a needle too much at this point. But we are looking at a 20-22% EBITDA in the future, so 24-25 onwards.
Okay. Okay. And so by FY25, what is your top line target? Currently, you're at about 1,000 crores, I suppose. So, what's your target by FY25?
On a standalone basis, we believe we'll be somewhere in the range of 1,400 to 1,500 crores in 2 years. So that's our assumption that we are having at this point. But a lot of it is dependent on the price realization, which currently are at a higher level. So for PAP, they are at 500 rupees right now, which probably could correct it going forward, but volume may compensate it. But so having said that, we are hoping somewhere in that range.
And so just to feedback, as other participants also on the call have mentioned about the promoter group thing. So, sir, we seriously wish that you do something about this because, it's been happening over the last 3 years. And it, shouldn't have taken us to, talk to you about why the promoters are selling and now that you're looking for a solution. So, this should have been taken care long back because, seriously having a small cap company, with some promising outlook and having a promoter, shareholding of less than 40% or, if the selling continues, it could go beyond 35% below 35% as well. So that doesn't instill too much confidence in the investors, and that is why probably people are staying away from the stock and not, despite having strong commentary, not wanting to participate in the whole thing. So we seriously wish that you take some steps as soon as possible on this front as well.
Sure. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Ankur from Quasar Capital. Please go ahead.
Sir, one question on PAP. Sir, any worry from the recent competitor announcement specifically from Sadhana Nitro regarding the way they are coming, the technology which they have come up with? Obviously, their cost of production is going to be lower. So, sir, any futuristic mindset change which has happened or which has been discussed internally, which you would like to share, where you feel that maybe, let's say, this particular project is done with, and after that we won't be able to expand further because the competition is coming at a much lower cost and a technological barrier. Sir, any thoughts on that?
So it is too early to comment on Sadhana, and we also would not like to talk about other companies on this call. But having said that, you must also realize that most of our PAP is captive. So our subsidiary company, Valiant Laboratories, they use it. So up to 80-85% or so goes into that, which is kind of a short business for us. It's just the balance 10 to 15% of PAP which we need to worry about, and given the market is pretty large, so I don't think that should be too much of an issue.
No, so the question is more from a futuristic angle in the sense that, okay, let's say 100%, we can call it captive, but let's say because of their technology, or what I understand is that from that path of production, the cost of production is much lower than what we are producing. Okay, so even if we call it captive, but obviously from a ROI perspective, you will eventually evaluate, right, whether this project is viable or not. There have been many companies in many sectors which have set up backward integration units, but they became unviable because someone else was manufacturing at a much lower cost, and for them it became viable to procure from them.
It is lower cost if you look at it as a raw key, the main key material, which is nitrobenzene. Yes, it is cheaper than PNCB, but there is also a production of a co-product which is aniline. So if the chemistries are working out fine and the commercially also working out, then that another product market also needs to be addressed, because if they are not able to sell that in the market, in that case the product cost becomes much higher. So it's then the marketing of both PAP as well as aniline, because otherwise there'll be cost of disposal of that co-product.
Okay, fair.
And in terms of PAP, we don't have a co-product. It's just common salt which gets formed in the process.
Okay, great. Thanks. Point taken.
Thank you. Participants, to ask a question, you may press star and 1. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
Thank you all for participating in this earnings con call. I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know more about the company, please reach out to our investor relations managers at Valiant Advisors. Thank you. Stay safe and stay healthy. Thank you.
Thank you. Ladies and gentlemen, on behalf of Emkay Global Financial Services, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.